standard deviations, fib projections, so that you have like marketable targets that you can reach for, and then move stops along the way if you're scaling out and letting runners run. Mostly everyone trade ES today. If you did, this has been definitely a much different setup than the structure of NQ. So if we look at ES right now, the structure of ES has been the accumulation. This is basically accumulation phase, right? Like we have this consolidation on the daily, and then we kind of have this drive up out of consolidation. And now this is just that accumulation dipping into a fair value gap on the higher time frame. What is this? Do I have lines on this chart? And I don't know why I put them there. So I think the last 2 days really kind of drive home the importance of higher time frame. If we just take a look at the daily structure on ES and NQ, this to me seems a little more difficult to read, just because we're accumulating in a fair value gap. So if you look at this and you see how the candle bodies are all respecting CE, and here's your lowest candle body, which was last Thursday, and then none of the candle bodies break lower than last Thursday. Okay, so the wicks are all doing their thing to grab liquidity, and it looks like last Thursday was the actual low of this accumulation, and then all the rest of the days were just accumulating. Then you had our news day yesterday, and we run this buy stop just barely, so we don't even get up towards these next equal highs, but just enough so that, and then start to run up out of this fair value gap. So it's a little more clear on NQ, but this could be the start of like a 3 drives pattern. So if we just kind of measure, here's our first drive out of accumulation, about 152 points. And so we just had, this is starting to take out, looks like it's starting to work on this buy side liquidity after accumulating in a fair value gap. So if we just run the same, we're definitely looking at a good possibility of, over the next week, another drive pattern out of here that's going to take out all this buy side. And if we just kind of scrub back, this is a really good draw above all these higher time frame short-term intermediate highs. Is this volume imbalance right here. And then we have a look where the top of this puts us. What do we have right here? Well, this is an untested order block. So we have this that's just slightly below it. Okay, where price runs up into a higher time frame interest, then we have price swiftly move away. So this and this can be used as order blocks because this would be a deep discount or deep in premium for market makers to want to drive short. So just looking at kind of this drive, and if we get another one, NQ looks like it's going to start its third drive, but this would kind of be a guesstimate of if we match this drive and then it lines up with order blocks on the daily. So we'll go over to NQ. So again, this was your accumulation in a fair value gap, and we'll go back over this on a down to a smaller time frame as well, and look at it. So we'll just go to NQ on the daily and just go over that real quick. So NQ on the daily. Okay. So we have this accumulation. Okay, so I kind of took this candle that ran out of this accumulation box. If I put it at the top of this candle body, it's pretty much dips down into it and then takes off. So we had a 4%. Okay, then I had another measuring 4.4% after accumulation, another drive pattern. Here's accumulation again, and then roughly 4 to 5% is going to put us close to that fair value gap up there. So again, if we, let's say we lower this back down to 4.5%. So we're looking at puts us right at this order block. So again, the same thing when we're talking about order blocks, we really want to see a candle in the opposite direction before price really runs away from it. And so again, you could use these two. So these can both be used as order blocks. So this could be a first one used, and it rejects from here initially, and then it could come up and go into this one. So for NQ, if we look at the higher time frame, we'll just go back here just to show examples. Okay. So we have a couple highs right here. And when we start to see price use this old high as support for a little bit and then accumulates underneath of it, but kind of still using like these old highs, like these candle bodies. If I take this last swing high and the candle bodies, look at where the candle bodies in the accumulation phase all hold. I mean, you can see my line right across there, and the candle bodies match up perfectly. So when we're looking at higher time frame structure, one of the things that Michael always talks about is we want to look for old highs that now begin to show support. Okay, so moving into the recent price action of NQ, we've had this run up. Here's your distribution accumulation. And so a couple things that we had marked out was we want to mark out this first daily fair value gap. Okay, well, the initial part of last week, we were dipping down into there, and pretty much the wicks were taking out that fair value gap right here. So moving in and out. Here's our fair value gap that also matches up with your order blocks. And so you can see how price used this daily order block for these 2 days. And if you study NQ a little bit, you'll notice that price likes to use the wicks of the order blocks on NQ a lot. Maybe because it's more volatile and it just moves a lot quicker or moves faster. But you can see how it was initially used. And now we have this fair value gap, and then this red line was a previous old high. So you can see price came down and touched it right here. And now you can see the candle bodies are being held by that old high. And then what do we have is we have our news day. So we run buy side and rerun all the sell side. And so for our higher time frame, we're not on the weekly, we're bullish. So we're not looking for price to drive through this fair value gap. This is where we're starting to look for entries to go long. And that's when the patience of higher time frame comes into play. And so we get institutional order flow entry drill. So I'll just get rid of this for right now. And you can see, look at that. Just wicks into the fair value gap and boom, it rockets away. So that's your institutional order flow. Doesn't need to come down into the middle, doesn't need to dig into this order block anymore. It's already been gathering longs every time it gets into this order block. And so now you have your institutional order flow entry drill that has ran all sell side liquidity now. This swing low and this swing low, okay, and then takes off. Again, our PD array for this little area is into discount. So it's been moving. This sign right here, if you just throw a line over equilibrium, look at how price is reacting every single time it gets just below equilibrium. It's wicking up, it's wicking up. Runs down into it, boom, rockets away. So the days where you have the long wicks, that's almost the market showing its hand. That's the market saying we're loving these long orders down here. This just happens to be, they bring a candle body down here, kind of balance out these wicks. Candle body, so that balances out this fair value gap now completely. So we have a down close candle and an up close candle completely balancing this fair value gap, whereas this was still unbalanced. And then here's your entry long. And then again, confluence with an old high is now supporting these candle bodies. So the higher time frame is what gives away what we're looking for. If we are just looking at price in these areas on lower time frames, you're going to get caught up in the huge movements. And you're going to start to not really pay attention to where price is really wanting to go to. And especially in these like accumulation phases, because at first it's hard to tell, like, okay, are we rejecting a high? Now we're going to come down lower. Is the market going to come down lower? Well, the higher time frame is going to give you the clue as to where it's rejecting on the higher time frame. And same thing with ES, that accumulation in the fair value gap. If you're just looking at lower time frames, 5 minute, 1 minute, like you're just seeing all the ups and downs, all these wicks, and then this starts to, you start to lose your bearings on what the market's actually doing. And so in the core content, we always talk it, you know, we talk about this in the main chat frequently, but core content that month one is we get expansions out of order blocks, and then what does price do after expansion? It's either going to retrace or it's going to consolidate. And usually when you have a consolidation phase after expansion, that's your accumulation distribution. And so you're looking for price to expand again. Because if it didn't retrace or it didn't completely reverse, see, we can, like, here's a good example. So expansion, here's an order block, okay? So we have down close candle, price runs away quickly. Order block, price runs down into the order block. It's gathering longs, goes deeper into the order block. It expands out of the order block, gets to a area probably, if I was to measure this, let's say maybe into premium. Okay, so there you go. There's your right above equilibrium, so into premium. And it reverses. So there's no accumulation, there's no consolidation. It just reverses, taking out a previous low. And what does it do? It digs into another order block. So you can see where price will expand and reverse. Here's expansion, consolidation. So we should expect another expansion out of here. And there's good reason for it too, right? We have all the buy side liquidity. So that's the basis for how you're looking to take trades. And so you should be looking for setups to go long. So knowing that, if you're constantly looking for setups to go long, sure, can you jump into something up here and take this day short? Yeah, of course you can. But don't let you playing a short sway your ultimate bias and the ultimate narrative, which is we're looking for setups to go long. So then we'll just go down to a 4 hour. And I didn't really look at ES too much. But we have, like, the structure's okay. I mean, you just have these like big candle bodies, and it's like, okay, well, price is like dipping down into here. If this is an order block. Oh, here's another thing too. Is I think it prefers to use the candle bodies as its entry for order blocks. So, I mean, I guess you could use this one as price keeps dipping down into it, and this was the Thursday, I believe. Yeah, so price doesn't get lower than this. So that's also kind of a telltale sign. Thursday of last week, price hasn't gone lower. And now all these days pass by and price is unwilling to go lower. Takes a stab at it right here, doesn't break lower. Okay, so this would be a good marker on the 4 hour to look for places to go long. And where do we get that? We get that yesterday at close, basically. So after all the was it CPI? So nothing really stands out on the 4 hour. Like, that doesn't like glare to me that like, oh, this is a great entry right here. So then we'll just go down to the 1 hour. So again, we're looking for entries to go long. So you have a couple things on the 1 hour. You have a set of down close candles, and then price really runs above it. So 2 1 hour candles, and then a single 1 hour candle where price really runs above that. And it's holding this level right here. So then after this candle, we want to look for longs out of this order block. And so you have price comes back down into it, and then that's all she wrote, and she runs away. And you had a great target with these equal highs. Anytime you see equal highs, that's a great target. And so when your higher time frame narrative is in line, your lower time frame plays are going to work out, because that's where price is going to set up on the lower time frames. So again, I think that NQ had a much better structure. I think ES was a little more difficult. Okay, so 4-hour CPI, we have equal highs. We have a swing high right here that's on a lower time frame. Price runs that, and then it runs sell side liquidity. Okay, so sell side liquidity into a higher time frame point of interest, daily fair value gap, and price runs out of there. So knowing that we took sell side liquidity, we should be looking for long setups, especially the day before. In the beginning of the day, it takes buy side, and then at the end of the day, it takes sell side. And then we have the start of Thursday. This doesn't show it because it's 4 hours, but the start of Thursday runs previous day low immediately into a daily fair value gap. So we'll go down to the 1 hour. Okay, so this to me gives a better kind of shows you the order blocks better. So you have your down close candles, and then price comes up and runs away. So really a big movement from here all the way up to here. And then you have like this little accumulation phase, and it comes back down into this order block. And if you have here's a little trick too. So here we'll go to the 30. You can really see it on the 30-minute. Okay. So if you put a line right on top of this wick, okay, has this been, this is in your hour order blocks. Okay, so look at prices just touched into it right there, just barely. So you could look for an entry underneath this swing low, because again, that's all confluence. So if price is looking to go long, it's going to take out sell side liquidity into an hour order block, and then price moves away. Okay, and it really expands out of the order block. All this yesterday was just to run stops on both sides. So that's like your seek and destroy profile. So it's just constantly looking to run stops on all sides, all your buy side, all your sell side, which it does. Going back to your higher time frame though, your daily, here's your institutional order flow entry drill. Just taps into there. And that was Asia. So, and look at that. If you go to it is, I'll have to find those videos. It's core content, month 10, I believe. And there's another one that talks about the Asian range. And Michael talks about the Asian range being 2000 to midnight. Okay, that's it. That was his definition of the Asian range. If you throw on this, the Asian range gives you 19 to like 230. That's whoever made this. That's their They took multiple pieces of information and put it together to create this Asian range. Okay. But your true Asian range is 2000 to midnight. Okay, and there's your standard deviations. Okay, so no, we're not going to expect anything below here, as that was the entry. And so let's look at our standard deviations. We'll just switch these to 5, 6. Okay, so we almost hit 6 on the money, just shy of it. And that's your standard deviation off of this, the true Asian range. And in a couple of his core content videos, he mentions 2200 to or 2000 to midnight as a very special time frame, and it tells us a lot. There he goes. So that's I captured the wick. Let me see, did I get, okay, this needs to come down a little bit. All right, here we go. Now I got the wicks. So there you go, see? And what does it hit? It hits 5 standard deviation. So typically we're looking for 4. So 1 standard deviation, 2, 3, 4. What's right around 4? We got a new day opening gap. And then 5, usually you can give another standard deviation on news event weeks because price becomes more volatile. So it's going to move more than it would in a non high impact news week. So a heel bailed. But this is a heel was talking about how he had some contracts long and he closed them early. So this gives you reference. So here's 4 that takes out this swing high. 5 puts us up to here. So these are giving you, and it takes out this swing high. So that gives you points of reference of where to hold. And then you go down to your lower time frames. And so on these buy model days, notice how lower time frame you get this candle from the news. And what does that do? Again, it's like this plays no bearing in what's going to happen for the day. But if you're staring at lower time frames, you're going to see like, oh man, we ran buy side. So like, is price going to like come up and, oh, it didn't take this out, is it going to run down? And you can get caught in the wrong direction because you're on the lower time frames. Go back to the 30. Where's that news candle at? It's a part of this. Where's your setup at? It's actually in London. Okay, so then knowing that if you didn't play London, now you're looking at New York Open. Okay, you can go to the 5-minute. What it place in there? Just pretend this wick doesn't even exist because it's just a liquidity run. That's all that wick is. Look at this candle body. Not out of the ordinary of the progression of these candles. Okay, we have an order block. Price runs away. Price perfectly comes down into that order block, and boom, expands out of it. Order blocks are always paired with expansion. Accumulation, expands again. And then that was your like low resistance. Then you kind of have this just grinding for a while, lunchtime, probably. Yep, going into lunch, London close, I'm sorry. Finishing up lunch, still kind of grinding up. Pretty much holds in this fair value gap. So if we're looking at moving stops up, it's like, could price during lunch return down to this order block? Yeah, it's possible. So then you just move your stops if you got in there, just move your stops up to right here. Okay, once you see price move out of this range, look for another candle that goes down into like a fair value gap or an order block, which you have right here, this fair value gap. Okay, what does it do? It rejects out of there and moves up. Perfect, move your stops up, move it right here. And that's how you can manage letting runners run while using key like price action points as your stop loss placements. And then you just can keep watching PA. And here you have another point of expansion. And so I would imagine that this would be a good place to go long. Where are we at? We're at, okay, so we're almost close. So to me, this is going to be like another place. You got this new day opening gap. You have an order block here that hasn't been tested. So I would probably use these two because since it's a 5 minute, if we look at the 15, you just have a fair value gap here. And then start looking at old highs. So you don't really see the lower time frame order blocks in there, but this could be a good just price comes down to here. Now it's balanced this fair value gap. You have the new day opening gap holding. Could come down into here. Just come below and work out. But I would be looking for a long for tomorrow with this sitting right here. Anyone that went short right here, they're in trouble.
Yeah, so that was kind of what I was trying to think about later in the day was whenever you have a wick like that was so quickly put in on CPI,
Mm-hmm.
like would it be wise to like look back on a higher time frame and see like if there's other liquidity above that? You know, I'm just saying that because it's like how many orders were actually put on the books at that level on CPI?
Yeah.
So, so like right here, so I would gravitate to say, okay, we didn't respect any CE levels of that wick. So if we take that, you know, like surely it's not up here just to take out that wick. You know what I mean? That's kind of what I'm trying to
Yeah.
understand. Yeah.
So we have these relative equal highs right here. And again, just going back to here's if we look at this 1 hour order block, I would guess that we would probably see some sort of reaction right at this level at first, where it almost shows a rejection because now you're taking out like these relative
Yeah.
equal highs,
Yeah.
this right here. But
And that I use those relatively equal highs to give that wick high more like importance because I didn't think that wick alone was worth going back up there.
then when we go back to the daily, it's like if you had institutional order flow entry drill on the daily, price is going to be looking to expand up.
Yeah.
It's coming into this daily order block, institutional order flow entry drill, price looking to expand up. So these could easily be taken out. I mean, these are, if you look at these right here, this is like relative equal highs.
Yeah.
Um,
Order. Oh.
these could easily be taken out like 2 a.m., like going into the London kill zone. And price could really seek to get above here. That's really not like
Hmm.
that's not very much for NQ to move,
No.
especially like if we take a look at some of these other candles. It's like here's a 240. let's look at this day doesn't count because it was like a not even a real day. But if you just look at like the average, like what NQ moves in a day, like here's probably the smallest day minus this one because this doesn't really count. You have a couple small days in here, but it's 124 points. So what's going on here? Let's get rid of that. So even with the smallest day, you're getting real close to taking out that high.
Mm-hmm.
So could they set in equal highs and then next week, have a small retrace and run them? Possibly, but it seems like we're going to get some continuation out of this entry right here. And then ES is like just waiting to take out all that buy side.
Yeah. And that's all supported by like dollar just trading lower and macro stuff as well.
Yeah. So we're like real close. So if we just measure ES from close to the next buy side, that can happen in the Asian session easily.
Yeah.
So when you measure these things, it helps give like here's less than 40 points to take out this buy side. That's easily doable with expansion coming out of this accumulation phase. So for me, it's going to be looking at very little retracement because we already had this down here. This whole wick has been covered, with the body coming back up. So prices ran up, come back down, body, then candle body all the way up. Like price really doesn't need to come back lower because look at where this wick is.
Mm-hmm.
We didn't take out the high of this wick. So when you look at candle body like overlap and wick overlap, like price didn't even need to come down and take out these lows. You had so many wicks that were into this fair value gap that it's like price just needed to get back down into an area of discount after its accumulation phase to start moving up out of it. And what does it wait for? It waits for the news drivers. Gives that volatility. It allows price to run stops on both sides. And I think that's the important thing is to keep in mind what is the goal of the higher time frame. And if we get too zoned in on the 5 minute, especially the 1 minute, like I like to use the 5 minute for entries, but I usually have a split screen. So I'll keep an hour chart and I'll switch from 1 hour. I'll go like 30-minute, 1 hour, 4 hour, and just kind of keep monitoring like what's being put in on those time frames. So again, take out these wicks, and this is just another green candle on the way up. And what you have your bullish breaker. Swing low, swing high, runs the previous swing low, expands up above the previous swing high. So we want to see price come back down into this. So this was a good bullish breaker entry. And what does it do? It gives, what's our time frame right here? Okay, market opens. So we get volatility, boom, down in there, comes back up. Look at all these wicks. But look at your 950 macro candle bodies. the candle bodies just take out those candle bodies. It's your run on liquidity. Wicks do the damage. So your entries, technically these candle bodies are being held by this order block. But your wicks, your entries in the bullish breaker. And then with ES, really holds this fair value gap. There we go. We'll switch this to that. Doesn't break equilibrium. Just another accumulation phase before price starts to expand up. And then order block. Dips into that order block a couple times. Boom, expands out of it. But look at how the candle bodies progress. One last slam down into it, taking out sell side liquidity. And then what do the next candles do? Boom, boom, boom. And if you just keep studying price action, like, look at these relative equal lows. What does this one do before it really takes off? Run on sell side into a bullish breaker, and then boom, takes off. So again, it's easy to get caught up in the ups and downs of the lower time frame, and then especially if we went to like a 1 minute chart right in here, oh my gosh, you're going to be like, look at this 1 minute chart. If you're getting into positions in a bad spot, that 1 minute chart's going to like give you crazy anxiety. So here's your open, just up, down, just. So just keep your eyes on the on higher time frame. Your legitimate setups are going to come from your higher time frame. If you miss it, that's when you want to go to your lowers and see if you can find a good entry. So this one doesn't, on the 30-minute, this order block, it maybe, you might get filled on this. I think this is probably the same price, high and low of that other candle. High is 41.1775, and what's the low of this? Boom, perfect. Okay, that's perfect rebalancing. If we run our fib, I'll do a PD array fib. I bet you this is probably 62. And there's a fair value gap right there.
Yeah, I think it is exactly.
Boom, 62 fair value gap. Okay. But again, that was London. Okay, here's your New York open. Okay, so what's put in when this fair value gap is tested and price runs away? A down close candle. Price runs really high away from it, taking out these highs. What does that create? An order block. What does price want to run back down into? So even on this 30-minute time frame, let's look what your RR would be. Okay, we'll take one contract on ES. Okay, how much drawdown would you take? $62. Okay, $62, and you're looking at, on the lower time frames, you had triple highs right here. Like, boom, that's your target. No matter what happens with price after that, this is your target no matter what. Like, this is going to get taken. Okay, so one contract is getting you about 1,500 with $62 of drawdown, and that's working off of a 30-minute chart. Just looking at, okay, I didn't get the London entry. This is formed before New York Open. New York Open is forming right in here. Here's your order block. A candle that forms in the opposite direction before price quickly runs away. See, this is an order block. Look what happens. Where do they always throw in an order block for going the direction that higher time frame wants to go? Look at previous order blocks. So this is like the fake out. Always look at your opposing PD array. So price runs up into it, comes down, runs up, and then it starts to back all the way down as if it was rejecting this. And then what does it do? Up, back down into the order block, and then that was it. Boom, 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 and just totally takes out that order block. So, like I always suggest, like go back test this stuff. So look at opposing order blocks. See why they get disrespected. See why certain ones hold, and you'll notice that everything that's like long and discount, those get respected. Here's your order block right here. What does price come back down into? Look at that. Right into that order block, and then boom, runs away. Really moves out of there. And so this is, does it get down into this one? Nope. Doesn't quite get down into this one. So this is ES in it. This is kind of a nice candle body for it to use. And so I think if you keep your mindset on what the higher time frame is doing and constantly go back to that and mark it out, you'll start to see how these plays develop on some of these higher time frames. And it's like you could have taken entry on a 30-minute chart. You wouldn't even need the 5-minute, the 1-minute, and you would have got a beautiful entry with minimal drawdown. I think if we bump this up to 5 ES contracts, you're looking at $300 drawdown. Okay. If you're running an eval, kind of dangerous with some of these pullbacks. They can trigger drawdown levels, but you can manage that. You can take some off. You could take some off after you clear this first high, and just mitigate some of your risk as far as drawdown with like pullbacks like this. But 5 contracts on a 30-minute chart with a great entry. CNQ moved a little faster. And where was your New York Open? Okay, so NQ is already moving. So this was a tough entry to get into if you missed the London order block. But it really like just ripped out of New York Open. So we can look at that on a 5-minute and just see. Yeah. So all you got was a fair value gap entry. So a little bit different if you missed any entry prior to New York Open. But it gave it to you. Institutional order flow entry drill. Really tiny, just movements in that fair value gap. And then the last one is after the manipulation of New York Open. And then boom, just runs away. Really expands out of there. So that's what I would um, suggest. Like just keep working on those higher time frames, and keep that in mind when you're planning, so that you're constantly looking for the setups that are going to work out really well. And that video I posted on precision trading concepts, 3, it's been posted in main chat a couple times. Michael talks about all this stuff. I think he's on a 30-minute chart, and he'll throw lines where order blocks are at, and you'll see them get retested over and over again. Like here's one right here that gets tested over and over again. This is a lower time frame order block down here that it keeps getting tested. And he talks about looking at what's your higher time frame narrative, and it's like, okay, the weekly's bullish, so we're always looking for setups to go long. And if you look at, like, this was down to an order block, and boom, you get nice movement out of there into an order block, nice movement out of there. And he'll say, like, he's like, yeah, could you take some of these down moves? He's like, yeah, sure you could. But he'll say, he's like, I don't worry about missing these. He's like, because I'm looking for stuff that's going to align with the weekly and the daily. And then that gives you some big plays with setups that are easy to identify. That's all I had for you guys. Just wanted to go over that. Hopefully it was helpful. I gotta run and pick up my daughter. I hope you guys had a good day, and we'll keep learning and getting better. Yeah, you got it, guys. All right, we'll talk to you guys later. You guys have a good one, and we'll catch you tomorrow.